The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. I hope everyone had a great long weekend and very interesting. After a pullback, the Dow is now up 9 at 17,106, under the all-time high of 17,153. The S&P is at 2,004.80, up $1.50. You got the comp index up, I believe it's up 16, yes, up 16 at 45.95. Gold is down 22. There's a long discussion Wednesday night at this meeting that I was the guest host, and I spent quite a bit of time explaining that even though in many ways we should see gold moving higher because there have been some signs of inflation, the technical aspect that I'm looking at says that we should just go from the H pattern to the lowercase h pattern to a lowercase m pattern and then break and retest the low on the left side. We'll go through that in a moment, but I was a little surprised that it's down as deep as it is, but it really shouldn't be because, look at this, the dollar right now is up 22 ticks. So the DXY is broken out in that pattern that I spoke about the other day. It's that stalk leg. It's a continuation. It's the second one in a row. This is a very interesting pattern. I've noticed over the years that when you get this oval sideways consolidation, which breaks out into what I call the neck. Most importantly, there is a chance to start that one-to-one to the upside move, and any doji becomes a halfway mark, and that says that at 82.98 with a high of 83.04, we're getting kind of close to some kind of resistance level in the dollar, but as long as you see the comparable counterpoint, in Bach music, when you look at the different lines and listen to the different lines, you get one line that might be going up while another one's going down. When the bottom one starts to go up, the top one comes down. It's called counterpoint. And that counterpoint is a mirror image that you very often see. I wonder if I can grab this chart. Yes, I can. I'm going to grab this chart right here and I'll show you what I mean. This is a very good example. Look at that mirror image. Not 100%, but pretty darn close. This is a DOG. That's the ProShares Trust Short Dow 30. And it is the daily chart. And this is the DIA. This is the long Dow 30. And look how they're moving in counterpoint. And we've gotten peak A, B, C in the daily. And we should be going to a leg D. That's my anticipation, but based on the Chapman wave methodology. I got so busy, carried away with this stuff, that I almost forgot to talk about something that is so important. Let me just do that in the context of charts that we're looking at right here. So you see, this is what I show my subscribers every single day, every single market day, that is. This is what goes out. And I anticipate from a low bar, in a buy signal that goes to a buy mode in the Chapman wave, what we often find, most of the time what we find, is that from the bottom, most identifiable low bar, if you merely count each successively higher peak, you should get to A, then B. Let me just double check here. 1193. I think it was 1194. No, 11. You should get peak A, B, C, and D. Even in esoteric chart formations, even I dare say, I showed it once or twice this past summer, where we got it in the wave count. In the weather report, where we went to a D and then got a pullback. However, in this case, this is the 120-minute chart of the VIX, which spiked up to 1341 this morning, really high. You would have expected that going to 1341, that the market was down 130 points. Aberration. Something happened there. And look what happened. First trading day of the month, we've made a new recovery high in the 120-minute chart for leg D, pulling back really sharply from the high of 1341, trading at the low of the day right now at 12.30. And you've got a start of an A to B in the 120-minute chart of the Dow. And what's really important is that the daily charts show peak C in the daily needing 17,154 to start leg D, and in the S&P, the cash index, which had a high of 1998.59 at peak C on the 26th of August, we've gone to 2006.12, which means that the S&P has gone to the requisite leg D. We're getting closer and closer to some kind of a short-term pullback. But the Dow hasn't yet done that. And the Qs, this is so interesting. Let me show you. This is what I show my subscribers every day based on the same methodology I was just talking about. Lowest low bar is 16,333 on the, this should be the wrong way, this is the wrong way around. This should be the 8.7 instead of 7.8 on the 7th, 8.7 on the 7th of August. And lo and behold, if you get to 17,153.81, you start leg D to the upside. So with that said, let me tell you what I'm doing. This Friday a week, that is September the 12th, I'm going to be doing something that I don't do very often, but I'm going to be giving an 8-hour Chapman Wave seminar. This is going to be, I say it's for beginners of the Chapman Wave methodology, but we will be moving into a little bit more advanced areas. We won't quite get to level 2. I will give all the chart formations beforehand that we'll be looking at. And as you study, I'll be there for at least a month. You can just email me any question you have at any time, and I will send you back an answer as soon as I can based on the Chapman Wave methodology. But this, and if you got Tiger dollars, this is probably the... I was embarrassed when I was doing it. This is probably the least expensive. I'm not even going to use the word expensive. This is the least costly. I'm not even going to use the word costly. This is probably the cheapest Master Trader series I've ever given. I get so many emails from people about it. I got one just this morning. Let me just see if I can get it. This is from a subscriber, Basil. For the benefit of other readers, you might want to let them know if my interpretation of the, and I'm not going to mention what it is, trade on the Trader's Corner is correct. On the new buy, I think you meant the stop. We've already got a half position. We wanted to add another half position. I think you meant the stop to be 22.70 instead of 23.70. I placed my trade accordingly. The Trader's Corner reads, add half at 23.26 with a 23.70 stop. Well, my subscribers know that I will never put a stop above the entry point. It has to be below. So yes, correct. Thank you very much. And he goes on to say, thank you so much for the Trader's Corner and helping your readers make money. Thank you, Paul. So yeah, so I'll be following up with you, and I'm going to go through now to explain exactly what we'll be going through. When you see this E-mini chart that I'm showing you right now, that's the dollar chart. Let me just go to, we'll go through all the numbers in a moment. We were expecting a leg E, a leg D, and then possibly a leg E and the E-minis, and then possibly the S&P cash itself. Well, the E-minis have gone to a leg E, but that MACD, I'm going to teach you about the MACD. Why? Certain parameters on the moving average convergence divergence 12, 26, or 9 are the settings. The green line, in this case with a white background, is what I call the fast moving average. Actually, it's not really a fast moving average. It is in the end a fast moving average. But basically, it's the 9-period differential. It is the smoothed out 12, 26 turned into a 9-period exponential moving average, and you've got the slow stochastic at 95%. That is really strong. For this to really collapse at this particular point, you would have to get a price move in the E-mini from 2001 right now to probably 1991. below 1993, the 9-period exponential moving average, to really impact this MACD just a little bit, and for the stochastic to slip to about 91 or 87. Thank you in the den. Peak D says, Basil seminars, well worth the money. Thank you. I really do appreciate that. Then a couple of questions about some stocks, and we will look at them. So let me just go through this. What did we get? The objective in the Chapman wave methodology is to take you from a potential buy signal to a buy mode, and that buy mode says that even if you add a B or a C, you should go to at least a D. Well, what happens? The E-minis 120-minute chart went to a D at 2006.25, did that for 3 consecutive sessions, 120-minute bars, pullback went under the 9-period moving average earlier this morning. Now it's having a struggle at the 2002 repellent line. It needs to become a propellant line to move higher. So the stochastics turned down. It's under 80%. That's not good. And the MACD is crossed negative, but still holding quite well. So with the next 2 bars, that's 240 minutes, going to be really important. Now I'm going to move this away for a moment. I want to go through some other things. Look at this. The TLT this morning early on plopped. It went from the close on Friday at 119.05. It collapses and goes down 1.86 1.56% to 117.20. Now, the way I'm looking at this looks more like a G than a C, but we'll keep it that way. Why? Because the weekly chart is still acting really well with the stochastic at 88% and the MACD still very strong. And we've got a very powerful leg B in the monthly chart. If all this month the TLT does not break above 119.43, that'll be a peak B. But having gone above the downtrend line, it says that there should still be some buying pressure in bonds, but the dip this morning is telling me that it's getting harder and harder to move to the upside at this particular point without some kind of a breather. Looking at gold, GCZ 14, this is the December contract. I made a big deal last week about this pattern in the monthly that goes from an H to an M. I'm going to show this because this is not the chart that I want to demonstrate. I just want to show it because we're going to study. I believe that the coming 2 months is going to be extremely important in the market. That means that trend lines like this resistance line in the weekly chart from the high of August, I believe it was, August the 30th, week of the 30th, at 1438 in the weekly chart of gold, and then the lower high bar of the 21st, week of the 21st of March at 1390. That was last year, I'm sorry, that was last year, August of last year. And then the most recent high of July, the week of the 14th of week of the 11th of July at 1347. That trend line resistance is really important, but so is the support. We've broken under it. I'll go back into this and go into gold in a little bit more detail when we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's down 16. S&P's down $1.67. And I think I missed one thing. Yes, I didn't mention that crude oil is down $1.71 at 94. And you've got bonds down 1 and 5/30 seconds. At 1:40 and 12:30 seconds. So I wanted to show you this chart, and then there's some things that I need to go to right away. One is you've got the H pattern that goes to a continuous M pattern right there. When I was discussing this the other day, I made quite a big deal that these patterns are very much, they are fractals of smaller patterns. And as a result, because they repeat so often, my expectation was there should be nothing different since this particular pattern I drew in about a year ago. I drew in this H pattern and said, this is my impression, that gold is going to go, could have a bounce, could be a nice bounce, but that 200-period moving average, and I'm going to discuss this in great detail in my webinar coming up a week from Friday. Please go to the front page of TFNN. This is, I can only say to you, in terms of timing and the chart patterns that I'll be looking at that are going to be current, what I always do in any of my webinars for anyone who's taking them on my Master Trader series, what I always do is I discuss the chart patterns that we should be seeing coming up for the next 6 to 8 or more weeks. And I suspect that the patterns that we're going to be looking at come September into October are going to be extremely pertinent and are going to make you a lot of money if you're able to identify them. So let's see, in the den questions we had, Yas says, always worth your money to attend Basil's webinars and very timely. Thank you very much. I do appreciate that. Now, what we're looking at here is that the low of the week of the 28th of June at 114.68 went to a peak B and then came all the way back down to 114.50, then went to 114.46, so it negated that. That becomes a B minus. Then it runs up again and goes peak A, B, fails under the 200-period moving average, even lower than the previous high of 137.55. It goes to 133.69 the week of the 14th of March of 2014, pulls back and makes a higher low. That in essence is actually a positive and says, hey, the next rally, if it's able to take out, can't just do one, it's got to take out not just 133.69, it's got to take out that. Plus, at that particular point, the 200-period moving average was at 133.74. It has to take them both out and then spiral above 137.55. That would be really positive. Within the context of a larger down move, it would say, hey, we can go up a little longer and a little more than most people think. But no, what's happened, we've started the second arch to the downside. MACD's failing. Not bad, but still failing. And the stochastic's pulling back at 46, call it 47%. So I'm watching this real closely because if at any point 119.42 is taken out, that's not going to be a pretty picture. Now, at the back of my mind, I'm saying, wait a minute, we were looking at another chart that had exactly the same patterns just the other day. And I was saying, let's see if I can do this. This is the 10-minute... it was the 120-minute chart of silver. I remember now. So let's see if that's exactly what we were looking at. SIZ, was it? Or did I go to the continuous? Yes, SIZ and the continuous. And what I'd said is those arches said, this is exactly the technique I'm talking about, that third arch could go quite a bit higher if it breaks above the left side high in silver of 19.735. What it did went right above the 200-period exponential moving average. It went to 19.95 at 4 o'clock on the 28th of August, plunged in that pattern that I said, whoa, be careful, this could be that single leg A phenomenon, pulls back and it breaks under 19.355. And that says this is the moment that if you don't bounce back above 19.355 to at least test the arch formation, the familiar zone, that's very negative. So we're going to watch silver really closely. I'm watching gold and silver right now because I have to put it together with the dollar, which says that the dollar at this particular point, if it establishes the high that it just made and keeps in that area for 2 sessions in the daily, that's really positive. If, in fact, it pulls back sharply by the end of the day or tomorrow, silver and gold could actually have another bounce before they go lower. So that was it. And then I had a really good question in the den. The question is, just before we go to the break, it says, Z in the Den says, hi Basil, question on daily charts, ESU, now in leg E. Question is, can tops be made without all of them in unison? I'll be right back. Great question. Basil Chapman, Dow's down 16, S&P's down $1.80. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So the question is, and I spoke about this on Friday. I believe it was Friday. It might have been Thursday. Can you make tops in leg D or E or F in the majority of indices or many indices and then fail even if some do not get there? In other words, could you fail at a C in, say, the Dow, but the S&P and the others make their Ds and Es and then you tank? The only time that that works is when I get a stalk leg formation, and historically, I'm going back decades, there are a couple of times where either the Dow or the diamonds, DIA, fail to make D. They make a parallel high at C and just cannot squeeze that penny above. Or something happens that is, one of them does it, and one of them, you've got to make up some kind of an excuse because it hasn't quite done it. So you have to use a C1, C2 type top. So let's just go through what's really important. Let's go through them one at a time. Let me just check to see if we got callers. No, we don't have callers, so we're going to use this time judiciously. The Dow should go above. Look, the MACD strong, stochastic strong. It should have enough energy just to go that extra 70 points or so to make leg D over the next couple of days. It's the weekly chart that's going to be the real issue. The only thing I'm having questions about is what exactly is the wave count in some of the weekly charts. So let's just do the daily first, and then we'll do them one at a time. See, there's that V-shaped formation. Let me just show you the chart. I show my subscribers to my traders, to my opening call every day. See this V-shaped pattern? And it says, yes, there's a really good chance that the Dow will go to that circle, that target area that I've got right there. And that'll be above 17,153. The S&P has today, SPX.X, made that requisite leg D in the Chapman wave. So the MACD is strong, very strong. The histogram, look at that, the green line above the 0% line, very good. Yes, volume's just been absolutely abysmal over the last couple of weeks, but you know that I use on-balance volume, and that's been working very nicely. So the stochastics at 93%, that is very strong. So let me just quickly say that this is a little different to the V-shaped pattern that we were looking at in the daily chart, because this right shoulder has gone quite a lot higher than the 1991.39 high with that doji high peak F back on the 25th of July. So this says, yep, you could get an instant restart, and this could be A, B, leg C, a pullback next week maybe, and then a leg D. We could go all the way into some part of September based on some criteria. But it's real simple. There's that inside track, Chapman wave inside track within the up channel that says this is the area that the price gets repelled at. So keep an eye on it. And the MACD could in the weekly chart deflect lower because it has not confirmed. Look, that's the deflection right there back in July of 2014 in March. I'm sorry, not July. That's the week of the 7th of March is the weekly chart. So I'm watching this real closely. I'm going to add a couple of other things, but I want to go through the indices. Look at the Qs, how strong they are. This is only leg C. I drew this. I gave a really detailed report from my subscribers over the weekend, sent it out, I think Saturday or Sunday. When was it? Saturday, Sunday, Monday. And look what it shows. There's a rising triangle. MACD is strong. Stochastics very strong. Unbalanced volume is strong. And lo and behold, we're within the confines, and we are moving. We've gone above a 2.61% expansion in Fibonacci. When you go above a 261, there's a chance that you're getting really close to some kind of a top. But 300% is not impossible, and 300% takes you to 100.56. So that's not very far away. And we're still expecting a leg D. 120-minute chart is in leg E/C. I don't want to spend too much time on that. And let's go to the IWM. IWM has been the worst of the indices, but it has made a leg E to the upside. MACD's good, stochastics at 88%, still very good. On balance, volume is not that great. And the weekly chart is not that good. It's making another W formation. And it's made a peak F already, unless there's a recycle. I'm calling this a peak F for now in the monthly. But I cannot rule out that there's a good chance that I must put in that oval pattern again. And that's going to be really important. Why? Because if the technicals continue to fail, that upper part of the arch formation of the oval is going to be a resistance line and say, uh-oh, forget it. The IWM is going, the Russell 2000 ETF is going to go below 110. That'll be very negative. It's at 116.91 right now. But at the same time, a break above 120.97 has to be a recycle. I have no choice then to call it not a G, but probably a C and say, hey, we're going to go even higher in the IWM. This is such a fascinating period. And all I can do is what I do with my subscribers. We try to get into positions that best suit the technical framework. And that's why we are only long in this particular situation at this particular point. Probably going to start going short real soon. But in the meantime, we want to see how these longs hold out. So that's IWM, and it just says real simply, a break into the 118s, only $1.50 above, would be very positive, and say we're extending in IWM, and a break on a very shorter term basis below 115 0.30, let's call it 115 to be safe, is a pretty negative situation. So now we want to look at the NYA.X. So you can see that all of these, let me just emphasize that when the stochastic flattens out in the 90% area, the next big move, now I mean the next big move, it's not the move that is on a shorter term basis. I'm talking looking out a little bit. So the next big move says that there is a good chance that the stochastic is going to work its way down at some point towards the under 20% level after holding out in the very high level 90% range for so long. So I'm watching this closely. Now, did the New York Stock Exchange make a leg D above 11,054.19? Today's high is 11,055. So it's gone to leg D, just barely. You can see that we are starting to get closer and closer to some kind of, at least a short-term top. So you always put a little plus sign above a D to show that we've achieved our goal. Let me do that again. 11,054.19. The high today is 11,055.02. We have made leg D. 120-minute chart squeaked to an either an F/C. We'll see which one it is. Right now, we don't have to make any decisions about that. Now, let's go to the SMHs. Very important. The SMHs, which is a semiconductor market vectors ETF, has, in fact, gone extended leg C from the doji close on Friday. And it says, under every circumstance, we should expect that at least a leg D is going to unfold, even if there's some choppiness over the next day or two. So, MACD is good. Stochastics at 90% pulling back. It made this high without a confirmation of the stochastic, going to a new recovery high. So we're going to watch this, and the on-balance volume is extremely high, very close to some kind of a dip, and the weekly chart has got leg D. So that's the SMHs. Now this guy, and the monthly chart is in leg F/B at recovery highs. Yeah, recovery highs. Why? Because the all-time high is at 100.20. Almost double of what we're at right now. Look at this, the QQQ series, all-time 120.50. Now it's trading at 99.97. That is impressive because it's only 20% higher, and it starts to make something very important, and it is an all-time high, which I thought would never happen in my lifetime. When I said I've got a major top back in April of 2000, I said, that's it, folks. We will never see those highs in my lifetime. We've got Neil in Portland, Oregon. Hi, Neil. How are you?
Good morning, Basil. How are you doing?
I'm well, thank you.
That's great. I just wanted to check with you on Amazon. They made kind of an interesting acquisition last week. It looks like a streaming video company by the name of Twitch. And some folks are believing it could be pretty incremental to their business in terms of both advertising, programming, as well as the gaming and, the young audience it brings along with them. So I just wanted to check some wave counts with you. It kind of looks like it's early in the game for at least the monthly side, if I'm looking at that properly, and looks like it still perhaps has some room to run, and people are excited about this, I believe.
So do you have a position in this at all?
I do, yeah. I'm long a couple hundred shares, not nothing.
Okay. So then I'm going to make this suggestion right now. Under the auspices of the Chapman wave, you've made a peak C in the daily. I know you spoke about the monthly, but let's just go to the daily because it's not going to go anywhere unless the daily actually breaks to a new recovery high above 346.67, which is the latest peak C. Now, what's really fascinating about Amazon is whereas before most of the time it would have no more than a one-day pullback, what we're looking at now, so that wasn't C, D, that was actually an F. I just picked out a little mistake that I made. So it was a peak F and not a peak E at the top when the earnings came out and it spiked to the high of 364.85. Okay, I'm pleased I did that. So now let's do this. Give me a second here. I just want to check on two things. So the stochastic and the MACD are good. Stochastic's starting to pull back. It's holding very well. So, okay. Let me just set aside the acquisition for the moment, because we won't know, at least for one quarter, whether or not the acquisition is really working to their advantage on the shorter term, or whether it's going to be a long-term situation. On the short term, I'm just going to suggest to you, based on the 120-minute chart, the 200-period exponential moving average is at 338.26. And the 9-period exponential moving average is just about where it is right now, 340.05, and it's trading at 339.41. I would like to see A, B, C, D, and it made a peak D. It's either a D or an E in the 120-minute chart, and the last peak that went to the high of 346.67. It is holding and consolidating very nicely. I think that it needs very quickly to break above 342 and then to close about 346.67 for that gap. And this is that big gap that went from the close on the 24th of July, the day that the earnings spike occurred. 358.52 is the low. And then the very next day, the high is 324. Now, that's a 30-point gap. 30-point gaps on a $300, $400, $360 stock. It's nothing to sniff at, but it's not the end of the world. It's like a $5 gap on a $36 stock. But it is sometimes very difficult to make the transition from that sharp move down to the steady move up. And, in fact, this is something that I just noticed this moment. There's an island reversal. I don't know if you noticed that, between the gap down that occurred on the 25th of July, the low that was made at 304.59 on the 1st of August, and then the last high of 321.31 on the 12th of August before gapping up. That was the day of the, would that be the gap with that was last week, was the acquisition?
It was, yeah.
Okay, so I don't remember what that gap was on the 13th of August. Doesn't matter. Good action so far. The reason why I want to make a little bit of a fuss here about the parameters is that from my eye and from the technicals that I'm looking at, if Amazon in the next week and a half closes under 331, which is the 200-period moving average, a daily support, my thinking here is it's probably going to fill the gap on the downside between 326 and 321. So that would not suit your purpose at all. What you really want is over the next 2-3 sessions for Amazon to be pushing certainly above the high of Thursday, Friday, and Tuesday, and that's above let's call it 342. It has to get into the 342s, and it needs to hold there on a closing basis. If it does that any day from today into Thursday, I would say that's really good, because now I'm thinking it's going to test the 346.67 high to give us a D. I do not like peak C failures, especially when it is under a previous serious high. And that previous serious high, of course, would be the high that we were looking at back on that gap up on the on the 24th of July. So I'm going to treat it as if you had just asked me what parameters would be positive to continue holding my position and to make one of my positions a shorter-term position with a trading stop, a trailing and trading stop, and that would say is whoops, we've got a break coming up. Let me finalize my thoughts over the break, and I'll give them to you as succinctly as I can when we get back. Is that okay?
That'd be great.
Good. Okay. Thank you. I'll be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. With Neil in Portland, Oregon. We're looking at Amazon, and Neil has shares of Amazon, and we're looking to see. So let's make it real easy. I would be a little nervous if 338 on Amazon gets taken out. It's only a point lower than where it is right now, just because that's the 200-period moving average, and then the low of 337.16, which I believe should be the low of the day. Yes, that's the low of the day. Says if that gets taken out, yes, there should be a D, but when you're under a previous major high, sometimes you can fade at a peak C. So I'm going to do this. No chart. Let me just do this. Chart right there. Sorry. Okay. So, Neil, I'm just going to say that if Amazon takes out the low of the day, 337.16, I'd take off at least one of the positions, treating them with 300 three 100 lots. I take off one of the positions. What you really want to see, especially now that it's holding up, it's up 14 cents, when the general market is down, this is good action, but not great action. So my suspicion is that it's going to try for another pop to the upside if you're still in the position, and this manages by today's Tuesday, by tomorrow afternoon into Thursday morning to get to anywhere around 341, but preferably 342.50. I would say to you, great. Take the three positions and make one of them the trading position that has a trading stop, and that trading stop, I would probably say give it a couple of points, maybe 2.5, 3 points. If you're taking out, you're taking out. But what I would like is to see it. You're holding it, and it suddenly pops to 343.50. That says, great. Now it can try to make its way to a leg D in the daily above 346.67, and that means that one position is locking in a very nice profit. The others have a very good profit, and then you can take the second 100 and have that as a trading stop, maybe a little bit bigger. But the core position, that's the one that you can hold right now. But I would start to get kind of nervous if Amazon in the next 2 days hits 336.50, because then it's under the 9-period moving average. It's going to say, oops, that's not what it was supposed to do. Yeah, sideways pullback from peak D, as you see in the 120-minute chart. It's made 3 of those already. So this peak D is just using up time rather than points. But I think you got a nice entry, and you got a good chance that Amazon will try for a leg D. Hope that helps you.
Did you have Amazon at a peak B on the weekly side?
Peak B on the weekly side, underneath the major peak E high of 408.06 and the low of 286.68. That's where it started. So I've got peak B, and this is like I'm not sure that it's going to go all the way to 364.85. I would rather go one step at a time, and I'd look for the 347.98, which is I believe that's the let me just double check here. I think that's the 50-day, 200-day. That's the 200-period simple moving average. That would be the target of most money managers, 347, 348. So one step at a time.
Okay, great.
Sorry, and let me just finish. I think we're going to make H patterns, lowercase H patterns in Amazon as well. So that's why this is, to me, more a trade than a proper setup that says the weekly chart should keep going higher for quite a while. I think this is a trade that could complete within a week and a half or so.
Yeah,
Hope that helps you.
Me. Yeah, thank you.
Thank you very much. So let's do this. So the question, I haven't answered the question other than just say, I want you to go through the different indices. Now, when you look at the IYT, which is the transportation, leg D, and you remember I spoke about the Groucho Marx eyebrows. I'm going to teach this particular pattern as well. And this says, watch out, because if the transports at any point in September take out 149, it's only 2 points away, close under 149. This is the IYT trading at 151.99, up $1.19. If it takes it out on a weekly basis, that says be careful, because we could start to pull back quite sharply from there. If, in fact, it extends higher and goes to the 154...
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.